Hi student, it's Kate here. In this video, we will apply the formulas for direct labors and direct material variances to calculate the direct labors and direct materials variances and try to investigate to decide which variance we should look further into. Okay, so the first part I will use the formula that we derived before to calculate the variances. I will just make a line here and I will use the right hand side to do the calculation. So part A, okay, part A requires to calculate the total standard cost for direct materials and direct labor for the output this period. Okay, so we have direct materials, quantities per unit, price per unit, and then the cost. 0.8, $2. So we have 0.6 here. Direct labor, we have 0.2 hours. Each hours cost 17, so we have $3.4. So we have the total cost for direct materials and direct labor for at the actual output, so the flexible budget. Direct material, direct labor, we have cost per unit 1.6, 3.4, the actual output 15,342. Okay, so we'll have 245,472, and same thing 3.4 times 15,345, 52,162.8. Okay, now we move to part B, B to E. Okay, the first one would be direct material price variance. Remember, I tell you, whenever we calculate the price variance, we use the purchase quantity. So purchase quantity times actual price minus standard price. In here, the purchase quantity is 110 kilogram. Now, actual price, we see that they say they purchase 110,000 kilogram for $273,000. So we know that the price per unit would be 273,000 divided by 110,000. All right, and then we minus the standard price, which is this amount. How we arrive at, you see, if you times this 110,000 with the bracket, you arrive at 273,000, and you minus 220 and equal 53,000. So in this case, we know that this is unfavorable. The reason is unfavorable because we actually pay more than we should have paid at the standard price. Direct materials, quantity variance or efficiency variance, same thing. Now we have the formula is inside always we have actual quantity minus standard quantity given the actual output, and outside we have standard price. Okay, so standard price is 2, actual quantity, so you see that in here we have a total of 13,252 kilogram of material used, right? So we have 13,252, and we minus the standard quantity given the actual output. So we know that per unit they use 0.8 kilogram, and then they produce 15,342 units. And that's how we arrive at 1,956.8 unfavorable. Unfavorable because you'll see that this part is 12,273.6. So basically the actual quantity that we use is more than the quantity that we should have used given that actual output. The third one will be direct labor rate variance or price variance. Okay, we don't want to go price because that is human labor, which is called rate. So for the rate variance, you know that inside the bracket is always the difference between the actual rate and the standard rate, and outside would be the actual hours that we use. So in here, the actual hours that we use, they give us 2730 hours. And actual rate, you see, a cost of 47,000 for direct labor. So we see that we have 47,000 divided by 2730 and minus the standard rate, which is this part, 17. And now the amount is 47 minus 46 for 10 equal 590 unfavorable. It's unfavorable because the actual rate is actually more than 17, and you can also see that the actual we paid more than we should have paid given the standard rate. The direct labor efficiency variance equal. Also, inside the brackets, always something relating to the quantity. That is actual quantity minus the standard quantity. Sorry, I will use the number of hours instead. So inside that'll be actual hour minus standard hour given the actual output. Okay, outside that will be standard rate, and we have here standard rate is 17. Inside the actual hours that we use 2730 minus the standard hours given the actual output. So for each unit we use 2.2 hours, and we produce 15,342 units, and what we arrive at 57.8 favorable. Okay, so basically this bit is 3,068.4 hours. So you see that is significantly higher than what we actually spent. Now, the last question asks you to look at through all of this and decide which variance you should look at. Which one greater than 10% of total direct cost as standard. So basically total direct cost as standard is this bit. Alright, so if you add them up together, it comes up to about 300,000. However, no, sorry, that would be 52,000, 24,000. I have to recalculate this bit. 1.6 times 15,342 equal, yes, so that is 24,547.2. okay, now I would rather compare this, for instance, direct labor variance with direct labor cost, and I will compare direct material variance with the direct material cost. I will not compare that with the total cost, because if you compare like that, you will not investigate any of them. But if you look at this bit and you look at this bit, okay, you see that actually the direct labor efficiency variance greater than 10% of direct labor cost at standard. So you want to look at this. Okay, how about other things? So direct material quantity variance is not more than 10% of direct material cost, and also direct labor rate variance is not much. Direct material price variance is a lot. Do you know why? Because we use the purchase quantity. Okay, so it seems a lot. Now when we look at the direct labor efficiency variance, we know that it's favorable. People spend significantly less time to produce that actual output. So you want to know whether people actually steal time or what, because this is something that you have to talk to the production managers to know. Of course, you can also predict some kind of result of causes, but the first suggestion would be to talk to production managers. Okay, and for this video, I just want to illustrate how we calculate the variance and also how to pick up the variance to investigate. How to investigate that? The first, as I say, the first advice would be to talk to the production managers and then to ask him what actually happened during the production process, and then after that you can take some appropriate action. So that is for this video. You can watch the next video for how to calculate the manufacturing overhead variances. Thank you for watching.